Hello everyone, and thank you once again for attending today's presentation. This is a specialist trading presentation, and we feel we are your premier site online for education in trading virtually all of the markets. Now, the reason why we call it specialist trading is because I was a specialist on the floor of the Pacific Stock Exchange for a total of 9 years. To get a little bit more background about myself, once again, my name is Primo. I am the president and founder of SpecialistTrading.com. I've been trading for actually a total of 36 years, but I was actually on the floor of the stock exchange for 16, and 9 of those years I was a specialist. And during my trading tenure for these past 36 years, I've accumulated a lot of knowledge. I've had difficult times, I've had fantastic times, but I've pretty much started out trading just the way everyone else does. You know, I have a difficult time right at first, so I can really lessen your learning curve if you're just a beginning trader or if you're having difficulty, because I've just about seen and traded everything imaginable and been through every market environment imaginable, from crashes all the way to straight up markets. And so if you're having difficulty getting your trading on board, getting it on track, Specialist Trading can really help you with the education that we provide for all of our members and our students. And as you'll see in today's presentation, we're all about educating traders. Now, what we're going to be talking about today are new and simple ways to use candlesticks. And if you were here last time we had a presentation, you'll see that this is part 2, because this is a series we had for people attending our presentations. I know a lot of traders like to use candlesticks, either intraday trading or trading the markets, either with Forex markets, E-mini, or with stock markets. You can use the candlesticks virtually for any market in any direction, any time frame. But I'm going to show you some really innovative ways to use them, and they'll really hopefully heighten your trading, taking it to the next level, and you'll be able to start using this as soon as possible, as soon as you can spot these new candlestick patterns. But before we begin, we're required to show you this. I ask that you please take a moment to view our disclaimer. As I just stated, I'm going to show you a lot of performance results using these new and innovative way to use candlesticks, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment once again to view the disclaimer, I'd also like to mention, for those of you who are new to my presentations, I like to take questions, but at the very end of our webinar. So if you happen to have a question, please write it down, or if you can remember it, that's fine, and we will reserve the last 10 or 15 minutes for any type of question you may have, either on something we went over today or anything that we have available for teaching you at Specialist Trading. We also will give you a phone number as well as an email address. If you happen to come up with a question once we've concluded, don't worry. If you write those down, you'll be able to contact us and ask us anything you like. Okay, so please just wait till the very end. That way the presentation will move a lot smoother and we'll be able to cover a lot more ground rather than breaking it up every couple of seconds for another question. All right? Thank you very much. Now, as I stated, I've been trading for 36 years, and I started out just like everybody else. I'm sure most of you who have attended my presentations before know that I struggled my first year on the floor as a specialist. And it wasn't until I really changed in my entire way of trading that things started to work for me. So that's really my goal at Specialist Trading. That's really what I want to do with all my students and members. Is my goal is to teach you how to trade with the specialist edge. And a lot of people will say, well, what is that edge? Does that mean you have to be on the floor? Do you have to get orders with order flow? Or do you have to have an education of some type of background in finance or economics? No, the specialist edge is just really rooted in simplicity. It's more about changing your mindset as opposed to holding on to all of the conventional wisdom that you think will make you successful. Because this is the way I used to trade. I used to have a ton of indicators. I used to follow tons of informational news reports. I used to be involved with all these. We didn't have trading rooms at the time, but we had a lot of newsletters. And my trading was tremendously complicated. In fact, it was overcomplicated. So what my mentors taught me, these were specialists on the floor, they said, Steve, as soon as you start simplifying your trading, that's when you'll be consistent, and that's when you won't have to struggle anymore. So it was true. The minute I started letting go of a lot of these things, instead of having 10 indicators, I only had 1. Instead of listening to news constantly to make my decisions, I just maybe would just listen and just kind of be aware of it, but not try to have it mold me and to do anything off of it. And instead of being involved in all these different newsletters and subscribing to whatever this trading guru said, I just kind of followed and learned how to listen to the market. That's when my trading started to turn around. So that's my goal. As someone who's been trading for this long and someone who teaches and mentors students in over 52 countries, this is what my goal is, to teach you how to trade with the specialist edge, which is rooted in simplicity. All right, so here's what you're going to learn today. All right, we're going to cover the second edge. This is in our series of candlesticks, and this is called a bull-bull, bear-bear pattern. Okay, I'm sure a lot of you haven't heard of it before, but this is a really great pattern to spot if you see it in any market and in any direction, and then I'll show you some current examples. Okay, but before we begin, why don't we review part one? For those of you who aren't or weren't able to get a recording or weren't able to attend our last presentation, let's review exactly to give you a little background, a little framework as to what we're going to be covering in part two of this presentation today. And once again, for those of you, I see some people may have just joined us. Remember, I'm not going to take any questions until the end of the presentation. So if you happen to have a question, please write it down, and I promise I'll get to it at the very end. Okay? All right, so why don't we review what we covered in part one of our presentation on new and simple ways to use candlesticks. And if you recall, everything was based off of an engulfing pattern. Okay, that's really the format which we're going to be looking for. We're not looking for dojis or any type of hanging man or things of that nature. We're just going to be focusing on engulfing patterns. And someone will say, well, why would we just choose engulfing patterns? Well, you may want to write this down because there is a high probability that the trend will continue in the direction of the engulfing bar for the next 2 to 5 bars. So if you have an engulfing pattern and you're looking at weekly charts, well, there's a high probability that for the next 2 to 5 weeks you're going to continue in that direction. If you have a 5-minute bar chart and an engulfing pattern, there's a high probability for the next 2 to 5 minute bars you're going to be seeing some very nice movement in that direction. Okay, so this is a nice edge, and this is just your standard engulfing pattern. This is not one of the things we're going to be talking about today, but I just want to give you a background as to how engulfing patterns work. Here's your standard engulfing pattern. Just real quickly, we'll review this for people who aren't familiar with it. It's a 2-bar pattern, and if it's a bullish engulfing pattern, as we see here, this means that the odds are we're going to go higher. So you need a down day followed by an upward day. It's kind of a reversal pattern. The only thing we're looking for is that the first day, which is a downward day, its body from the open to close must be totally engulfed. The second day's body must totally engulf the first day's body. Okay? We are not, I repeat, we are not concerned with engulfing the range from top to bottom. I know some people feel you have to engulf the entire body, such as an outside day. We're not concerned with that. We're only concerned with engulfing from open to close of the prior day. If you find this pattern, this is called a bullish engulfing pattern, and there's a high probability that for the next 2 to 5 bars you will continue in the direction of the second bar or the engulfing bar. So since this was an up day, the likelihood is that you're going to continue for the next 2 to 5 days going up. Now if we have a bearish engulfing pattern, which is the same pattern just reverse, it's a 2-bar pattern once again, but the first day is an upward day and the second day is a downward day. So it's once again a reversal type of pattern to the downside. And all we're looking for is for the second day, the second bar of that pattern, its downward body to totally engulf the upward body of the day before. Now remember, we're not looking to openly engulf the high to low, the entire range. We're only concerned with engulfing the body from the open to close. Okay? If you see this pattern in any time frame, this is usually bearish because it's called a bearish engulfing pattern, and you have a nice probability that you will continue downward in the engulfing bar's direction, which is this bar right here, for the next 2 to 5 bars. All right, so let's just show you an example of how this works. It doesn't really matter if this is a stock or an intraday E-mini chart or the Forex chart, because this works in every charting market or any type of tradable unit you're looking at. We see here that we have an engulfing pattern right here, a bullish engulfing pattern. So right after that happens, the next 3 bars are up, which is followed by a bearish engulfing pattern, which follows with the next 2 bars down. And then we have a series of bullish engulfing patterns right here. So this is going to be, should be bullish, and as you can see, we go even higher. So you see how this works? This is a nice edge to have. But what if we could, kick that edge up one more notch? What if we could even have a higher probability of this working? Because engulfing patterns, the way they are and the way I explained to you, don't always work all the time. So how can we increase the edge? Well, here's what we covered last presentation. This was our first edge. It's called an engulfing pattern +1. And we'll go over it real quickly for those of you who weren't available to attend. Here's your standard engulfing pattern, as we just stated, 2 bars. And a +1 just means that we also want to engulf at least one more body, one more open to close range here. See that? So the last bar engulfed the open to close ranges of at least one more bar. So you have your bullish engulfing plus 1. Now you can have a bullish engulfing plus 3, plus 5, plus 10 if you want. The more bodies that you engulf, the higher the probability that you're going to be going higher in this case, okay? Remember, we're only concerned with engulfing the open to close ranges, not the high to low range as we see here, because we never would have engulfed that high. And it doesn't matter if this was an up day or a down day, okay? So all of the bars, it doesn't matter if they're up or down. So now we have, if we see this pattern, we have an even greater edge that we're going to be going upward, all right? And we just reverse it. If we have our standard bearish engulfing pattern, well, bearish engulfing pattern plus 1 means that we have one more body in here that we engulfed, all right? The more bodies we have that we engulf from open to close, the higher the probability that we are going to be going lower. So we shared with you some examples of engulfing patterns plus 1. Remember, they can be used in any market, in any direction. So let's start out with stocks. Here's what we shared with you last week. The QQQs, okay, it's an ETF. We see here that we had some type of range going on in the QQQs, but we noticed we have a bearish engulfing plus 2. Okay, so here's our standard bearish engulfing pattern plus 1, 2, and then look what happens. Right after that, we went down quickly 5 points in the next couple of weeks or so. How about Apple? If we're looking at Apple, we're intraday trading Apple on a 15-minute bar chart. Well, we've been heading lower. And all of a sudden, what do we see? We see a bullish engulfing pattern right here, plus 1, 2, 3, 4. As you can see, right when that happened, Apple went up 12 points. Okay, remember, the more bodies you engulf, if you engulf one, that's fine. That's a very high probability scenario. But if you engulf more than one, it's even better. And the higher you go up the scale, the more probability that it will go in that direction. Now, how about the spiders? We all know that since the beginning of the year, the market has pretty much gone straight up. We had a tremendous rally all the way up until today, until we kind of sold off a little bit today, but we keep on flirting with new highs each and every day. Is there any way we could have known that in advance? Well, if we look at a weekly chart of the spiders, which are just the ETF of the S&P index, we would have seen here that the very first week of the year, what did we have? We had a bullish engulfing pattern, plus 1, 2, 3, 4, 5. Okay, as you see right here. This body engulfed the bodies of 5 more bars, okay? Or actually say a bullish engulfing pattern plus 1, 2, 3, 4, I'm sorry. So that's very high probability telling you the very first week of the year that we were probably going to have a nice rally. And as I'm sure you've seen, the S&P spiders have gone up 14 points, which is a tremendous amount, roughly about anywhere between 1,500 and 2,000 points comparable in the Dow. Now let's look at the E-mini, all right? If you're talking about E-mini, we're usually looking at intraday trading. We see here on a tick bar chart that we have a bullish engulfing pattern plus 1, 2, 3, 4, 5, 6, 7, 8, okay? So even if you engulf a doji, that still counts that you're engulfing a bar. So it's a bullish engulfing pattern plus 8, and as you can see here later on in that day, the E-mini went straight up, 8 points. And all along the way, there were more bullish engulfing patterns plus 1 here, as you could see. So I was giving you more confirmation that we're going higher. Now we look at the daily bar, the E-mini. Same thing, we're kind of going sideways to lower, but what do we have? We have a bearish engulfing pattern plus 1, 2, 3, 4, 5. Okay, so that was giving you a very strong clue that the E-mini at that time was most likely going lower on a daily basis. Okay, we engulfed a total of 5 bars on top of the standard engulfing pattern. And look what happened, 60 points immediately after that, which pretty much transfers over nearly 500 points in the Dow. And the same technique works on the Forex markets. We see here a chart of the Australian dollar. Now we have a bullish engulfing pattern plus 1. Okay, that's your standard basic pattern. And we went up 900 pips, close to $9,000, straight up. A weekly chart of the Canadian dollar. Bearish engulfing pattern plus 1, your standard bearish engulfing pattern. So we go down 1,000 pips right off the bat. Okay, so right now, so you have about $10,000 profit trading one contract. You think, well, I'm going to take my profit and leave. It looks like we've bottomed out. Well, maybe not. If we look, the market is always giving you signals as to what it wants to do. All right. As I stated at the beginning, the minute I stopped listening to the outside sources, such as tons of indicators and tons of chat rooms and trading rooms or too much news, and really learned how to listen to the market by following the chart, I really started to see those consistent gains. So someone right here could have said, well, I went to that chat room and they said the Canadian dollar should be having some support here. In fact, it should be going higher with some economic news that's coming out. Well, if you learned how to listen to the market, you'd see that there was a bearish engulfing pattern +1, telling you that the Canadian dollar, not some outside source, but the actual market is telling you we're probably most likely going even lower, which, as you can see, had another 700 pips to the downside. All right, so that's what we covered in our first presentation. As you can see, I kind of went over it very quickly because I know a lot of people may have missed it, and so I didn't want to leave you out of making sure that you didn't know what's actually going on. So I just wanted to cover and make sure. Once again, if you happen to come in late and just came in halfway through, if you have any questions, just kindly wait till the very end so we can make sure that we'll be able to cover everything in the presentation. All right, so let's talk about our second edge. All right, now this is another great edge using candlesticks and using your standard engulfing pattern, but this is a little bit different. This is called a bull-bull or a bear-bear pattern. All right, so let's just go into this and see exactly what these patterns are. All right, once again, it's based off of your standard bullish engulfing pattern and bearish engulfing pattern. All right, the same things apply. We're looking to engulf a two-bar pattern, and we're looking to engulf the body of the previous bar. Okay, that's all we're looking to do. But in this case, a bull-bull pattern must be a two-bar pattern where you have an upward day, which is totally engulfed by another upward day. Okay, so you have to have two open bodies right here. All right, you see, that's why we call it bull-bull. In other words, two upward days. The first up day, in other words, we opened here and closed here, is totally engulfed in its body by the second body of the next day, open to close. All right? This is called a bull-bull pattern. If you see this pattern, the odds are even greater than the bullish engulfing pattern +1 that you're going to be headed in that upward direction. Okay? It's a very, very extremely strong pattern to find. Now, it works just the same way on the downside. This is your standard bearish engulfing pattern, a two-bar pattern where you have an upward day where the upward body is totally engulfed by the second day's downward body. Now, I guess you can tell what a bear-bear pattern is going to be right there. You're going to have a down day, which is totally engulfed by the second day, which is also down. This is an extremely powerful pattern that most likely is telling you there's a strong move to the downside. Okay? So, that is your second pattern coupled along with the first one we just talked about, which can really give you a significant edge in looking for the direction of the current market. Remember, you can use this whether you're looking at daily bars, weekly bars, or intraday bars. Here's the one caveat, though, the one thing. You're not going to see a lot of bear-bear patterns. I should say you're not going to see as many as a bullish engulfing pattern or a bearish engulfing pattern +1. You'll see a lot more of those. But when you do see a bull-bull or a bear-bear pattern, it's extremely, extremely powerful. All right, so let's go into some examples using this bull-bull, bear-bear pattern here. All right, let's start off with stocks once again. And if we look back in MSFT, Microsoft, going back to just about a month ago, all right, we see Microsoft was kind of going sideways to nowhere. Now, once again, if you traded the way I usually did when I first started out and I was looking at news or looking at indicators or even just looking at the range of the chart, you would look at this and say, well, it doesn't look like anything's happening. It's just kind of going sideways, kind of whipsaw. There's no real direction, so I'll stay away from this. Well, that's the way I used to trade, and I miss a lot of trades. But it wasn't until my mentors taught me these techniques where you'd look for this bull-bull pattern, because right here we have a beautiful bull-bull pattern the first or second week of April in Microsoft. So right now, rather than staying on the sidelines or discounting Microsoft, you could have said to yourself, well, there most likely is going to be a really nice run up to the upside. I may want to take advantage of this. And as you can see, it went up a quick 4 or 5 points in the next couple of weeks, 2 or 3 weeks. How about CRM? Same thing. This was in the middle to end of March. As you can see here, we're kind of headed lower, but who knows, maybe you thought we were hitting some support, or maybe some technician that you follow was saying that CRM is hitting some really nice bottom basing here. You should get ready to buy it. Well, if you looked at the chart and understood this simple pattern, you would say not really, because we have a very nice bear pattern here. All right, even though it's not perfectly in sync the way some of the bullish engulfing patterns are, you still have the second day engulfing the previous day's downward day. So this is a very negative signal, and as you can see, in the next 2 to 3 weeks, we went down. How about if we look at the spiders once again? Going back to roughly the beginning of the year, someone would say in hindsight, boy, on a daily chart, look at the spiders here. How could I have taken advantage of this tremendous rally here for this first 4 or 5 months of the year? I mean, no one knew we were going to be this strong. Look at all the economic stuff that was coming out in the news, the fiscal cliff, all the things that were going on with North Korea or with Europe and the economic disaster. Who would have thought there was going to be a tremendous rally at the beginning of the year? Well, actually, if you listen to the market, instead of all these outside sources, you would have seen that in the very first week of January, what did we have here? We had a bullish or a bull pattern +2. So we were engulfing not only the upward day before, but 2 more bars. So this is extremely powerful sign. A lot of our members caught this and saw this and went long the spiders or anything related to the S&P 500, because the spiders are just an ETF based off the S&P 500. And you would have caught this tremendous rally before anyone else did. So you see how simple it is when you learn how to listen to the market, as opposed to trying to focus on things that will only confuse you and make your trading a little bit overcomplicated. How about the E-minis? Okay, well, this works tremendously with the E-minis as well, and you can use it even if you're intraday trading. Here's a 10-minute bar of the E-mini going this past month or so, and as you can see here, we kind of had a nice upward move in the beginning on this 10-minute chart, followed by a downward move. Well, if we look here, we see that at this point on the 10-minute chart, we had a nice bull pattern. And look what happened in the next hours or two. We had a nice 5-point rise to the upside. And we went rather nice until we saw this pattern right here, which is a bear pattern. That's a little bit oblong, and it's not as balanced as you'll see other bullish engulfing or standard bullish engulfing, but that's okay. As long as you're engulfing the previous bar's direction, that's a negative sign. And you can see 13 points to the downside, which was signaled before through these 2 different patterns. How about a weekly chart? Okay, here's a weekly chart of the E-mini. Once again, this tremendous rally, but we even rallied, if we look here, going back to June of 2012, we can see here that we've rallied roughly about 250 points in the E-mini, and if you want to transfer that over to the Dow, that comes out to about 17 or 1,800 points. Was there any way we could have known about this in advance on a weekly chart? Well, yeah, if you look right here, what do we have? A bull pattern. Okay, actually it's a bull +2. Bull +1, 2. Okay, so this is a real bullish sign telling us that most likely we're going to have a really nice run up in the S&P or the E-mini, and you can even see the same thing in the Forex as well. Let's go on the Forex markets. We have a chart in February of the Swiss franc. Now I know this is tough to see because of the way the chart was constructed. It looks as if this is a downward day or a dark body, but actually it's an upward day, very small, but because of the thickness of the lines, it looks as if it's a downward day. It was actually an upward day, so it's a bullish engulfing pattern +1. Okay, very bullish, and as you can see, 500 pips in the next couple of weeks or so in the Swiss franc, all off of that pattern. Japanese yen, dollar yen, I should say, a weekly chart. This has had a tremendous run, gone straight up ever since September of October. A lot of people were left holding the bag saying, boy, I wish I could have taken advantage of this. Well, had you known how to spot this pattern, guess what? You would have had 1,800 pips in your favor on a weekly chart, because right here we have a bull pattern. Okay? Now, let's recap as we get close to the question and answer portion. We talked about what was included in our first presentation, in the first series of this 2-part presentation. That was engulfing patterns +1. A great technique where you want to see your standard engulfing pattern, and then you also want to engulf the bodies of anywhere from 1 to 10 more bars. Okay, you can find this in any time frame, in any direction. And then today we gave you the bull, bull, and bear, bear pattern, okay? It's your standard engulfing pattern, but an up day must be engulfed by another up day. A downward bar must be engulfed by another downward bar. Once again, this can be used in any market, in any direction, and in any time frame. And then we showed you numerous examples. So if you study these, and you can request for a video copy of this, we recorded this presentation, you can probably be able to see these all the time in different markets and different directions. And you can use this to help you with your trading. But there are extremely important things to remember, because this is one of the things that so many students, especially new students to our program, new members, have difficulty with, is that they jump in too soon. Because remember, both of these patterns are best used as directional tools. As you see here, they told you when a direction was going to begin or going to change. So use them as directional tools. Remember, you can apply them to any time frame and in any direction. Also remember, engulfing patterns plus one, that's what we talked about in the very beginning of this presentation, they are more prevalent than what we showed you just a few minutes ago, the bull, bull, and the bear, bear patterns. It doesn't mean you won't spot them, but you'll spot a lot more plus one patterns than you will bull, bull, or bear, bear patterns. Now, the most important thing to remember, especially for new members or for people attending this presentation for the first time, is that these are not trading strategies, okay? In order to have a full-fledged trading strategy, you have to have some type of structure that tells you when to enter. You have to have a piece of the puzzle that tells you where to place your stop. You also have to have sound, fundamental money management techniques used, and you have to have an exit target. You realize I didn't discuss any of these things today. All we did was discuss a tool that will show you a high probability for the direction. So what you want to do is use these two patterns which I showed you today and revealed. What you want to do is, once you spot them, you know that you have a high probability that you're going to be going in that direction, okay? Regardless of what the technical indicators are saying, or regardless of what some pundit is saying on TV. Don't listen to those things. Listen to the market. So if you see one of these patterns and it's an upward sign, you now know that there's a strong probability we're going higher. Now the next thing you need to do is apply some type of structure to go long. In other words, you need to have a strategy that has a high probability of catching that upward move to the upside, okay? Now, if I can just take a few minutes, this is what we provide at Specialist Trading. We provide you with strategies and techniques such as this. And probably our most resilient strategy that we have that basically works in any market is strategy number 4. So that's what I want to share with you today. We talked about this last week as well. We're currently marketing a combo of all 3 different market strategy number 4s. Now, they basically use the same guidelines, but different small alterations to fit the different markets and the different nuances of the stock market as opposed to the E-mini market as opposed to the Forex markets, okay? Now, all 3 of these strategy courses are discounted down to $14.85, and that's a tremendously inexpensive price to get all of these. But if you're interested in purchasing an individual, just if you say you only trade stocks, you can purchase one individually for $4.95. But this is for a limited time only, because we're only really presenting this while we have this 2-part webinar in place. Let me just show you some recent strategy number 4 signals. If you were a stock trader, these are actual signals that our members were alerted to in Facebook. You see where we would have gotten long and wouldn't have gotten short using these great strategies here, all in sync with the trend. Each one of these signals was not trying to fight the trend. They were actually in sync with the trend. As well as EW. A couple of weeks ago, that gave a tremendous news report that I believe its earnings weren't very good, and as you can see, it opened down tremendously from like roughly the 80s all the way down to the 60s. All along the way, strategy number 4 was issuing sell signals to all of our members. So if you wanted to stay in these trades, you could have made some nice money. This works just as well as strategy number 4 in the E-mini market. I trade this intraday when I intraday trade the E-mini. In fact, I traded it today as well. And these are just examples going back last month of some of the signals you'll get on a 5-minute chart. Now remember, 4 is such a great strategy. It works in any market, and it also works going trading to the upside just as well as it does trading to the downside. This was last month in the E-mini as well on another 5-minute chart. And then lastly, we have strategy number 4 for Forex. We have special specifications that you apply for using this for the Forex markets. As you can see here, we had a really nice signal going along the Canadian dollar, which we caught. We showed you that example also using that engulfing pattern where it caught the trend, and then we just applied strategy number 4 to this. Remember, you can purchase all three of these if you trade all different markets for $14.85. Just a couple of those trades, which I just showed you from this past month, would have paid over for this course many times over. But if you're only focusing on one market, a lot of students will say, well, Steve, I only trade the E-minis or I only trade the stock market. We're allowing for the short time to purchase an individual course for $4.95, okay? This is a limited time only. With all these courses, you get instant online access, so there's nothing you have to wait for. You don't have to wait for anything to be shipped. You can actually start looking at the rules and finding all the detailed instruction as early as this afternoon if you'd like. We tell you exact entries, exit points, and stop placement for each one of these different strategies. And we also show you ways to trade it either conservatively or aggressively. Now, this comes with 1 year of trade signal alerts. So we'll even show you on a daily basis where a signal has been given and generated so you can know how to trade it. We also present you with 1 year weekly trading lessons, such as today. Like today could be considered a trading lesson where I give you different tips and techniques on hopefully elevating your trading. And lastly, you have access to my personal email address. You can contact me at any time with any question, and I'll answer it just as soon as possible. Usually sometimes within that same 5 to 10 minute period, I'll answer a question. So if you're trading, you'll be able to get your answer right away. This all comes included with the purchase of either the full 3 combo or an individual course. Now, as stated, I'm reserving the last 10 or 15 minutes for questions. Remember, if you have any questions, contact us 2 different ways. You can either call us directly at 310-492-5393, and you can speak to our senior trade representative, that's Don Jans, or you can email Don at protraderstrategies.com, donjans@protraderstrategies.com. For those of you who are unfamiliar with protraderstrategies.com, they are our sister site, and they sell a lot of our programs and strategies, okay? So there's lots of ways to contact us. Speak to Don, call us directly, and we'll answer any question that you may have. Now I am going to thank you so much for waiting, and if you happen to have any questions, now is the time to ask. Remember, you can ask me anything that I went over today, preferably anything I went over today to hopefully fill you in on those bear-bear or bull-bull patterns. Or you can ask me something that we went over in the previous week, such as the bullish engulfing pattern +1 or +5. I see here looking that someone said I can't hear anything. I hope that most of you were able to hear me. Everyone else had signaled in that they heard fine, but there was someone roughly about 20 minutes ago that said they weren't able to hear. Oh, there's Phil. Hi, Phil. So it's coming through loud and clear. That's great. Phil is a member and student, and he's been around with us for a long time. Solomon is asking, does the bull have to be above the 50-period simple moving average? That's a great question. No, it doesn't. Remember, this is a directional tool. Now, if you find it above a 50-period simple moving average, that will even give you more probability for it to go higher. But if you find it even without, if you're not even looking at the 50-period simple moving average, that's okay, because these are really just great trend directional tools. And the 50-period simple moving average we use as our most powerful tool just to get us on the right side, but it's mainly designed to get you on the right side of the market, even though sometimes we can substantiate trend with buying above the 50-period or selling below. The bull and bear work much better at defining the trend, especially many times before, as you just saw in those examples, before the trend even begins. So there's a lot of ways to use them, okay? Please, though, if I can just really reiterate, they're not strategies, though. Remember, they're directional tools. You need a strategy that has stood the test of time, that is able to generate consistent trades and consistent profits so that you can be comfortable trading within the trend. And that's what we provide you, especially with strategy number 4. Okay, any other questions? That was a good one, though. A very good question, Solomon. Any other questions while you're having? Remember, if you happen to come up with a question once we've concluded, please contact Don Jans at the number provided below, or email him, and he'll supply you with anything information you may have. Jim, hi Jim. Jim is another great member of ours. Jim Kunish, yes. Do you have a strategy to exit the engulfing? No, we don't at this time. We have different strategies that use engulfing patterns, which are separate from this alone. But for this particular, no, this is just a directional tool, okay? In other words, this is just something that we use to find direction, and then we can apply a strategy. Now, we do have a strategy that was for Forex only, which is a strategy number 5, which does incorporate the engulfing patterns. but not in the same way in which you just saw. It just uses your standard engulfing pattern, and it gives you all the entry, exit, and stop placement, Jim. But that's just specifically designed for the Forex markets. You are welcome. Now, Brad asked, do you have a trading room? Well, Brad, no, I don't, because I don't know if you were here in the beginning. Our philosophy of specialist trading really goes against any type of trading or chat rooms. I always try to tell members and start off with this example. Prior to me forming specialist trading, I just traded using my own account, or I was managing a small fund at the time. And I had a friend of mine, who was interested in trading, but he didn't know anything about it, and he asked if he could sit next to me for a couple of weeks and just pick my brain and see exactly what I did. Maybe he could learn something. So he sat right next to me at my trading desk for a couple of weeks, told me exactly what I looked for, how I entered. We traded right alongside of each other, and he got it all down. He said, you know what, this is great. I know exactly what to do. I'm going to trade on my own now. So the next week or two, he was on his own. I didn't hear from him, so I thought, well, he must have done well, because I've had a good last couple of weeks, so I imagine he must be doing fairly well. So I called him to see how he was, and he said he hadn't made a dime. And I said, how could you not? I've had a very nice 2 weeks. I've made money. And he said the reason is because he couldn't trade the same way I traded. In other words, he had risk aversion to what I was entering, or maybe he got too scared and wanted to exit too early, or maybe he wanted to hold on too late. So that taught me a very important lesson, that no two people can trade the same way. You need to have a sound format, but then you need to mold it to fit your trading persona. So that's what we do at Specialist Trading. We teach you how to trade according to your personal needs. Now, the reason why we don't have trading room or chat room, excuse me, is because I look at those as crutches. After a while, what you'll start to do is trade following either myself or following someone in the room, and after that, you'll once again try to emulate someone else, and I feel personally from 36 years experience that will ultimately lead to failure. So I want to teach you how to trade with the specialist edge, but I don't want you to mimic anyone. And that really is a crutch with a lot of trading rooms. If you'll talk to a lot of trading rooms and chat rooms, you'll see that most of the people in there are no more successful than when they started, or very few. And I just think it's because it's a crutch. You can't learn to trade exactly the way someone else does. So I'd rather hold your hand by emailing you and showing you what I do, but I want to format a strategy to fit your needs. Okay, so I hope that answers your question, Brett. Lynn asks, what do you think about trading with binaries? Well, when you're speaking about binaries, I assume you're talking about the options. Is that what you're talking about, Lynn? I don't particularly trade the binaries, and I just, as I stated at the beginning of the presentation, I try to keep things as simple as possible and also make them with high probabilities so that you'll be able to have the highest probabilities for success. And I just really think that I know a lot of people that do well trading options and binaries, but it's very difficult. They have a sense better than a lot of other people's, and it's very difficult to teach. So I would rather keep things as cut and dry and as simple, rather than try to guess two things, guess which direction something is going, and then in a certain amount of time. Okay, so that makes it even more complicated than just basically trading a stock or future of the Forex markets. So I hope that answers your question. In a long-winded answer, no, I don't trade the binary. I have nothing really against them. I just think it makes things more difficult. And I like to keep things as simple as possible. Okay. Let's see. Dennis asks, in an engulfing pattern, is it considered to be engulfed if its open or close is exactly the same as the bar you were considering to be engulfed? That's a very good question, Dennis. Thank you so much for asking that. And basically what he's saying is that, once again, we're looking at a two-bar pattern, okay? And the first bar opens and closes at a certain level, so that's the body. And the next day totally engulfs that range and open to close. He's saying, what if the exact same open and closes are the same except reverse, because it's a reversal pattern? Is that considered an engulfing bar? And in my book, yes, it is, okay? I know some people don't consider that. They say it has to be outside those ranges of where you opened or closed, but I don't consider that. If you opened or closed at the exact same place, that is an engulfing pattern. So yes, I count those. When we use this technique and when I spot it, I will count those as engulfing patterns. So that's a very good question, Dennis. Thank you for stating that, because I didn't bring that up, but that's very good. He also asks, on the courses, is there software to generate signals? Well, yes, we do have add-ons for Metastock, for NinjaTrader, and also for TradeStation. So this will automatically generate up and down arrows telling you where the setup bars are. Okay, so we have those available for those particular software brands. So if you trade with TradeStation or with Metastock or with NinjaTrader, you can request one of the add-ons, and you will have automatic signals generated, regardless of time frame or direction. Okay, and these are great. There's nothing wrong with them, but remember, I want you to be able to ultimately spot the signals on your own. And I give you such detailed instruction that you'll be able to spot them on your own. I spot, when I give nightly signals, I look over the entire S&P 500 index of stocks, and I spot them without the aid of the add-on. I just know where there's a strategy number 4, or a strategy number 1, or a strategy number 3. I can tell right off the bat. Now, I've been trading these for a good 25 years, but the point is, you should be able to spot them on your own after a course of a couple of weeks, even a couple of months, perhaps. Okay? Once again, any more questions should we continue, and you happen to come up with a question regarding what we talked about today, you can email our senior trade rep, Don Jans, at protraderstrategies.com. A few more questions here from Rob. Would you use an opposite engulfing pattern as a reason to exit? This is a good question. What he's saying is basically you see one engulfing pattern that gives you some type of entry, and then you see another one in the next direction, the opposite direction. Would you use that to exit? No, I personally don't. I know a lot of students like to trade that way. I would rather use it, have a fixed exit point and a fixed stop placement, and then we teach you ways in which to raise your stop, a different myriad of ways in which to trail. We have, I think, roughly about 7 different stop placements altogether, and we have about 4 different exit points, so there's lots of ways to enter and exit. But I don't like to use the same pattern to tell me when I'm getting in, to tell me when I'm getting out. I just like to use it and have it for one purpose only, okay? Now, I'm not saying, Rob, that won't work. I just personally don't use it that way. I know some students who we have at Specialist Trading have used it like that in the past. I found when I tried that before that it'll oftentimes get me out a little bit too early. So I really don't want to focus on that much, okay? Hope that answers your question. We have just a few more minutes to answer any questions that you may have. Once again, I just want to, before we conclude here, go back and show you the combo that we're offering. This is a great, tremendously inexpensive package, as you can see right here. The price is so inexpensive. Just off of the examples, the 3 or 4 examples I showed you where we had actual trades this last month, if you're thinking about getting all 3 and you trade all markets, this would be the way to go. If you only trade one market for a limited time only, we'll offer the strategy number 4 at this very inexpensive price. So I really urge you, this is a strategy that I use on my daily trading, but we also have it provided for signals daily and overnight trading as well. You can also apply it to weekly, or even if some of our students use this for monthly charts, and then what they do is they use it for their IRA to see if they have a really nice signal on, say, a monthly chart. They will hold that stock for anywhere from 6 months to a couple of years, just using the same rules but applying them to a monthly chart, okay? Yes, we do have stats of how well it works on daily bars for the E-mini and on daily bars for the Forex markets. We don't have any stats for stocks because there are just so many stocks. As people, I'm sure there are members in the class today. There are just so many Strategy 4 signals that are produced each and every night. And remember, as I stated in the beginning, we are an educational company. We are not a systematic company or simply a signal generating company. So you can call up Don and speak to him in terms of any current stats that we may have, but we have them for the E-mini as well as the Forex markets. We just don't mark each and every stock. It would just be too time consuming. We're a small kind of family-owned company, and it would just be too difficult for us to put all together. But as I stated, I personally trade it myself, so if a lot of people are thinking that we're a vendor or we just generate strategies and systems, I urge you to do a Google search on Specialist Trading or on myself, and you can see how reputable we are and a lot of the people that have had success with our methodologies. Last thing, Mark asks, is this session recorded to hear if you missed the first part because of internet storm issues? Yes, Mark, just simply contact Don. Here's our information once again, and he will email you back a recording. So just call him or email him, and he'll send you the link to the recording, okay? We're just about out of time. I want to thank you so much for attending today. This concludes our 2-part series on very simple and easy ways to use the candlesticks, new and innovative ways as well. I'm sure many of you have not seen or heard of these before, but they can really help you in terms of using them as a directional tool. But please remember, they're only to be used as directional tools. You can start using them as soon as you'd like, as soon as tomorrow if you want, but only for direction. After you found the direction, then you need to apply some type of structure or some strategy that you can trust or is reliable, and that's where we think we can provide you with many strategies, okay? I want to thank you so much for attending today. Thank you so much for coming to our presentations. I look forward to seeing you in the next webinar, and I look forward to all of you becoming members of Specialist Trading. Thanks. We'll see you next time. Bye-bye.